But all you need is 1 or 2 trades a year to actually change your account. Just 1 or 2, right? And because again, it's crypto, it's only 1 or 2 trades to change your life.
All right, y'all. Today, I'm joined by two very special guests, Sean and Krisha from Mango Crypto. Guys, thank you so much for coming on the channel.
Hey, our pleasure, man. Thank you for having us.
Yeah,
it's been a while since we kind of had a collab, and we were in very different market conditions as well. I think the last time we spoke, Bitcoin was around 15K, right? Around that price.
Yep. And no, actually, it was around
no,
25K.
yeah, it was around 25. This is before the FTX capitulation happened.
Yeah,
that's crazy. That's a while ago, like a year.
Yeah.
Was it not in the last collab you called 15K as the
bottom? I called 18K as the bottom, and we were like hovering there, and I'm just like, man, this feels good to call like a certain number, and just FTX came and pooped on my party.
Well, I remember you gave that level, and we did get a bounce from that level, and it lasted a while, so that was a good call.
Right. We did get the initial bounce of 18K. Right.
Yeah, because I remember that
is the levels queen. She finds levels that everyone else misses to the dot.
It is very interesting. Yeah, I follow your guys' TA. So I kind of wanted to just ask you, how did you guys end up doing what you're doing right now? You are very interesting in the crypto space because you guys are trading the high timeframes only. And you're doing this full time. You have a super chill lifestyle. You're on the beach all day. Unlike me, I can't sleep at night because I'm scalping on the 5-minute time frame. I want to know your story. First of all, how did you guys get together? How did you end up becoming traders? And then how did you end up trading crypto and living the Mango lifestyle? That's your whole trademark, the Mango lifestyle.
Oh, man.
There's so much in there, Jason. That's a lot of questions. Okay, no.
So it all started when I quit my job because I got sick of the 9 to 5 grind, right? Just really got sick of it. I quit my job to go back to do my PhD. Then my prof was like, you got to check out, because my background's in computer science, and I was going to do my PhD in comp sci. My prof was like, you got to check out this Bitcoin thing. And I thought it was a scam. So I just threw it right back at her, and she threw Ethereum at me. That's how I found Ethereum. It was around $20 at the time. And I watched it go from 20 to 50 to 100. I'm like, holy shit, there's so much money to be made in this. And I started through a fundamental background or fundamental approach initially, thinking that if you do fundamental analysis, you can make a lot of money in these markets. Yeah. But I wasn't making money. I wasn't making any money. I just getting crapped on over and over and again. And Krisha, we've been together for almost a decade now. Yeah. She was right by me, constantly looking at the charts, constantly looking at price, constantly looking at moving averages. And I used to get annoyed at her. I'm like, we got to read white papers. We got to do FA. We can't be watching the charts all the time. But what I was doing wasn't working. And what she was doing seemed to work. That's when I threw out everything I was doing and started diving into the charts like hardcore, reading a lot of papers on technical analysis, a lot of old school books, because I love doing the research. And then I figured it out that TA is actually about human behavior depicted on charts. It's actually more representative of fundamental analysis than all the FA that you could do on your own. TA is an amalgamation of everyone's FA put together and their actions based on their research. And I was like, holy shit, this is a hack to FA, to fundamental analysis, right? So I was doing exactly what you were doing, Jason, too, like lower time frame trading, getting really, really sucked into the charts all day long. And wasn't long before I realized that, damn, this is just me back to my old lifestyle in the corporate gig of constantly being in front of the computer. And that's not what I wanted. That's not what I quit my job for, right? I quit my job to be able to have a more relaxed life. And that's when I discovered trend trading, and trend trading is done in the higher time frames. And yeah, that's essentially a very succinct version of 7 years of our journey.
Yeah. And finding your trading personality, like it's, I mean, because when you start this entire journey of trading, we start off with the lower time frames, because every time you get on over to an exchange as a new trader, you're immediately thrown into like the 1 hour time frame, right? So you feel those emotions like rapidly, especially if you enter in the middle of a bull run and you see price just like, you know, melt up in front of you. And so I'm just like, oh, whoa, whoa, whoa. And but I tried my hand at scalping and stuff. Man, like you said, you got to stay awake for that. You got to be nocturnal to be, you know, scalping the lower time frames, to be trading the lower time frames. And at that point, I realized that that doesn't fit my trading personality, and I started losing. So I said, whoa, got to take a step back. And that's when I had to sort of rethink things. And that's when I began learning from Sean. So Sean found TA for me, but he made it like a science. He dove into it, started studying it, and then taught it to me in a more like structured way.
Interesting. Yeah. When new traders get on exchanges, they want to trade right now. Like, you know, people are like, oh, okay, let's see what trade can I enter right now. So you guys have developed this, you know, this term you use, like the mango lifestyle, or that super mango, you know, when it's super chill, just chilling out at the beach, making money, not on the computer. How would you define the mango lifestyle? Because it is something that I feel every trader, even somebody like myself on the lower time frames, we all want to move in that direction, right? We didn't give up the 9 to 5 so we could have the 24/7, you know. So how do you define the mango lifestyle?
Yeah, so I mean, I think the mango lifestyle is about really fitting trading to your current lifestyle and everything that you really like doing right now. And we are sort of, you know, looking for traders. Like for me, for instance, I know I don't like active trade management. I don't like active trade management. So I had to find my trading personality and like, okay, I know I don't want to be in the computer for too long, right? So I'm going to trade the larger swings in the market. That way I don't have to be on the computer. I can take the trade when price comes down to my level, the high conviction trades, right? When you're trading the higher time frames, you get a good sort of glimpse of the entire macro picture. You get to see where those critical regions of support and resistance are, right? So if price is at those critical levels, you can place your bids there. Know that, okay, you're waiting on XYZ candle close. For instance, I'll wait on the 3-day candle close. I'll wait on the 4-day candle close. And I can look at that and walk away with that as a part of my risk management system, right? And if I have back tested my systems well enough, and which I do, and that's one thing that I'm a huge proponent of, and I tell people, I'm like, listen, you're here, you want to trade the mango way, but make sure that you're back testing your systems. When you're doing that, back test your systems. That way you have more conviction, you got more confidence in it, right? So even when I do take those trades on the 2-day time frame, the 4-day time frame, I have confidence in my system that if price breaks, I know that, okay, I'm wrong on the trade. Okay, there could be a potential retest depending on the candle that's closed. And if it closes under, I'll come back only in that 2-day period, the 4-day period, whenever I deem that, okay, that's my time frame. And then I manage my trade accordingly. But that helps me sort of, you know, set expectations, be confident, and take the high conviction plays.
Yeah, exactly. And if I had to define the mango way, I would define it as being really, really stress-free about taking your losses, knowing that every trade that you take, there's a high probability that you could lose. And now that might make people go, whoa, 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 a high probability that you may lose. And people are always looking for trading strategies that have a high probability of winning, but you could actually win out in the long run by having a low probability trading strategy, but a high win magnitude, right? So those are the kind of wins that we like to go for at Mango. High win magnitude, where the wins are huge, but the probability of winning may not be that high. You could have a 35% probability winning, or maybe 45% because it's crypto. Trend trades tend to happen far more often with massive magnitude, right? But all you need is 1 or 2 trades a year to actually change your account. Just 1 or 2, right? And because, again, it's crypto, it's only 1 or 2 trades to change your life. Honestly, 2019, right? I had 3 trades that changed my life, and they happened back to back. Luckily, right? And I was like, holy shit, within a span of 8 months, 3 different trades changed my life forever. And that's the Mango way, hunting for those big wins. But those big wins will only come if you are okay losing. You are okay getting into a trade saying, hey, you know what, I may lose. And when you do lose, being very, very disciplined about it, knowing that it's not a reflection of who you are as a person, and saying, this trend trade, this big win trade did not work out. I'm taking my loss, I'm taking my money and putting it elsewhere, because I'm going to go hunt for a bigger win elsewhere, right? Because your loss on on the charts is not a reflection of who you are. It's just, hey, the trade did not work out. It had a 25% chance to work out, but it had a massive magnitude, which is why I took it. But it didn't work out because there was 75% chance to lose anyways. I was mentally ready for it. That's the Mango way, being mentally ready to lose, right? And in our community, we call ourselves champion losers because we lose so well. We are always going for the next win without getting demotivated.
Yeah, that's cool. So a few questions I have for you, like when I hear this kind of thing is, and especially for a lot of people like in my audience, is how do you manage your risk with a strategy like this? Because you know, for me, if I'm going to enter a trade on a high term time frame and I have like this big zone of like 5%, you know, I have to risk a lot of capital for that. You know what I'm saying? Or if I want to have any kind of like meaningful gain, or I have to use such a small position size that it might not necessarily be even worth it. So how do you manage your risk? I guess, are you using like smaller position sizes and just going for those huge moves, or are you putting a lot of risk on?
So you can't be stress-free if you're putting a lot of risk on, right? The Mango lifestyle does entail having patience. It does entail saying, you know what, I'm going to win in the long run because of the amount of volatility in the market, especially when it does arrive in crypto. And it compounds, right? If you get a win on Bitcoin and then the rest of crypto goes on a run as well, those wins just end up compounding when you can take those wins on Bitcoin, funnel it into altcoins, and then again, those smaller position size go from like a 5x win on Bitcoin can turn into a 20x win because now you funnel that into crypto, into an altcoin. So yeah, we do start off with very, very small position sizes, but that is part of the Mango way, that where you can be on the beach knowing that your account is protected. But now you may ask, hey, what if you have a big volatile move towards the downside? Again, we have low leverage positions as well. We don't go anything more than 10x ever, right? 10x is the cutoff. We prefer 5x, right? Because even at 5x, right, if you're looking for a big win where you're looking for a 2x, like 200% on your trade, 300% on your trade, you need to allow for 20% move against you. 20% move against you means a 5x leverage trade could wipe your account out, right? So 5x is what we prefer. So we are a low leverage trading community with now, not all of us are like that. There are people who do trade a lower time frame and they do enjoy it. But what Krisha and I like to do is keep our leverage between 5x to 10x. And the higher our leverage goes, the lower we expose ourselves to the market. So you don't need to get that much of a win if you go to like 15x leverage, right? You can just take your profits and book it.
Right. Yeah, you leverage up a tiny bit of margin and then get out. Yeah. So that's pretty cool. So basically then with your strategy, you know, you could take like $1,000 and potentially 20x it. Now you've got 20 grand, and you can see how quickly that could snowball just from like one or two big trades a year, you know? So
yeah. That's pretty much what happened to one of my Binance accounts. It initially, the Bitcoin amount 5x, right? But then the bull market hit, and then you were able to take that 5x worth of USD capital, funnel it into altcoins, and then altcoins 10x. Now suddenly that account is 50x. And it's just mind-blowing how that all happens suddenly in crypto, right? And I'm not putting on high leverage. I'm putting on, in fact, Binance accounts, you could do this with a spot, with just spot trading. You don't need to even leverage if you are trading in the right environment and the right trend trading strategies.
Yeah.
Right, for sure. So it seems like you guys have this system down pretty well, and you know, I've been following you guys. So what's a typical day like for you guys? I mean, because for me, I'll be honest, like, you know, I spend hours a day on the charts looking for trades and all that, and I enjoy it. But are you guys even on the charts every day? I mean,
well, every morning we wake up and we are on the charts. It's the first thing we do when we wake up.
All right.
But we're checking for trend indicators right off the bat. We keep it very simple. When the daily candle closes, we check for how the daily close. When the weekly candle close, we check for how the weekly candle close. And for the 4-day candle closes, we literally monitor only 3 time frames for the most part. Everything else that we do is more for entertainment value, like the 4-hour, the 1-hour, etc. Just like entertainment. Very rarely will we put trades based on the lower time frames.
Yeah, and when it comes to like low volatility periods, now because we're trading the higher time frames, right, the mid to higher time frames, I'm also okay. We're both okay not being in a trade. And as traders, any sort of trader, I think everyone should be okay to not be in a trade at any given point in time, right? Now, if price of volatility dries out, right, and we're not seeing that volatility, we're not seeing those big swings actually play out, that's the time where I'll be like, okay, you know what? I'm going to reevaluate. I'll come back when the volatility picks up, when there are signs on the chart that, hey, okay, we're seeing some buy pressure coming in here. Market is turning around. That's when I'll start getting those positions in, right? But before then, there are a lot of times as a high time frame trader, as a mid time frame trader, when I'm okay not being in a trade, I'll always look for opportunity, right? But if there's nothing out there, I'm not going to risk something when I don't see a very, very clear return on the chart, right? It has to be a very clear trade setup. And I feel like a lot of new traders, they probably struggle with that. They feel like they just have to be trading all the time, right? But that is also the fastest way to lose money. Yeah, exactly. When you feel like you just have to be in a trade, right? So yeah, I figured I just sort of
no
put
trade
that
is a trade.
Yeah.
No trade is a trade. Not being in a trade is a trade. You're making the choice to keep your capital aside and expose yourself to opportunity cost, right? So no trade is a trade, and you have to actively tell yourself that I am making the trade to not be in a trade, right? So that way it counters that trading urge that you have.
Yeah, patience is just so key, no matter what time frame you're trading on, for sure.
Exactly.
So I want to ask you guys about where you foresee the crypto going in the next 2 years, because you've got right now like two camps. You know, you've got the people saying the ETF is going to kick off the next bull run. Then you've got people saying, you know, Bitcoin's only existed since quantitative easing started hardcore after the 2008 crash, and we've only experienced crypto going through these bull cycles in a macro bull market where there's all this money creation that's now going into crypto. Where do you see this going in the next 2 years? If you want to pull up a chart or something, I mean, I understand both sides. So what's your take?
I'll let you go first. I'll let you share your thoughts.
I can't speak for crypto as a whole, but I feel like Bitcoin has reached this, this velocity, I guess, in adoption. I think about what we're seeing with the whole ETF buildup. Right, we're seeing a lot of adoption actually come in. Like Canada already has an active Bitcoin ETF, right? We're seeing a lot of adoption globally. So as far as Bitcoin's trajectory is concerned, I mean, just look at the trend right now, right? We've already rallied like from 15K to 30K. I mean, we've already done a good 100%. People are still, you know, there's still a lot more bearish. We're seeing a lot more bearish spirit than bullish spirit in the market right now. But as far as the trajectory is concerned, you can see that the chart itself, we're just looking at price action. We're currently in an upward trajectory. And if you're mapping it to even the Bitcoin halving, and you just have to look back. Now, I am purely into the technicals of it. Yeah, I'm keeping an eye on the fundamentals, especially the ETF buildup. But just looking at that, I'm saying that Bitcoin, at the very least, goes high. At least it breaks its previous all-time high of $60,000. Just based on its value proposition, and as well as adoption, as well as network effects of Bitcoin.
I tend to agree. Do you think we will hit the $100,000 benchmark that everybody's been waiting for? Or do you think we're going to get a front run and everyone's going to be sadly, you know, not taking profits?
The latest narrative was what, right? Everyone was like, oh, Bitcoin is going to hit 60K. It's going to hit 100K before the halving. Right, that was like the latest narrative that I think it played out for like a month, and it sort of fizzled out because price then dumped, right? But
so the narrative, the ETF narrative specifically, right, is a temporary phenomenon for now. Bitcoin is likely going to use it as a catalyst to either pump or dump. In my opinion, it doesn't matter in regards to Bitcoin's long-term proposition, because Bitcoin's long-term proposition is that it's a check on all central banks' misbehavior, right? I keep it as simple as that, right? Bitcoin is a check on global central bank liquidity and misbehavior. If you believe that globally central bankers are going to get their shit together and suddenly start behaving appropriately, then yeah, Bitcoin is going to fail. Okay, Bitcoin's actually going to go sideways, and it's going to be more of a hobby asset that people want to collect. But if you are betting against that, if you are betting on central banks actually behaving appropriately, then you are betting against thousands and thousands of years of central banks always behaving badly. It's happened through the dawn of time, where especially towards the end of an empire's era, right? Central banks tend to behave in the most misappropriate ways possible, where they print. That's always happened, right?
Yeah,
So that's
they
what Bitcoin is.
devalue.
Yeah, they always devalue. They've always done it. So unless something different happens this time, and you know how the meme goes, that hey, saying this time is different always comes to bite you in the ass. This time is not going to be different. They're going to do the same thing. The balance sheets are going to go up. Yes, while the dollar strengthens, Bitcoin is going to see some headwinds, right? But Bitcoin, we also need to understand that an $80,000 Bitcoin, okay, while interest rates are, let's throw out a number, okay, interest rates are going at 8%, 10%, is a lot more valuable in what you can do with that $80,000, because you can go and put it into an interest-bearing instrument that's yielding 8%. So that value of that $80,000 Bitcoin is far more than Bitcoin sitting at, let's say, 150K, and you're getting interest rates of only 1% or 2%, because now you're storing all your value in that Bitcoin. You're not able to get any passive income by liquidating that Bitcoin and putting it into an interest-bearing instrument, because now you're getting only 1%, right? Putting 80,000 into a 10% interest-bearing instrument versus taking $120,000 and putting into 1% interest-bearing instrument. You got to think of it that way. What is the value of your Bitcoin, considering that you can take that 80,000 and put it elsewhere where you're getting 10%?
Right.
And I also feel like that, think about it, like the big money people who actually have like a lot of money to invest in Bitcoin, for them, I feel like Bitcoin at these levels is still very, very illiquid, right? Because of how low in the price point is for them, they buy like 1%, 2% of their portfolio. They're moving price.
Yeah.
They're moving price. They don't want to do that. If you're looking to invest in an asset, you want it to be liquid enough such that when you get in, you're not moving price up on yourself, right? Then suddenly your buy-in gets a lot more expensive. So I don't believe, so while to put it simply, Bitcoin still has a lot more adoption left in it, right? I think a lot of people can still enter this market, thus pushing up price even further, given its limited supply of 21 million Bitcoin, right? And also the consequential halvings that we see every 4 years. So with all of these economic facets, yeah, 100K on the freaking books. 2 years, or perhaps, maybe.
By the end of 2023, I'm joking. Maybe. Hey, wait. Maybe. What was that face, man? So we need an explanation.
I don't think Bitcoin gets to 100K by the end of 2023.
Okay.
I didn't want Bitcoin getting to 42,000 by end of 2023, right? While we plotted a plan for what to do if Bitcoin did get up to like 45K by end of 2023, we didn't want it to happen. Right? Again, this is based on our Ichimoku theory and trend trading strategies, where like the equilibrium of Bitcoin wasn't set yet to allow for us to have an outsized move without it being sold into as soon as it gets to the 50K region, 60K region. So any move to that region would have meant any trend trader selling into that price.
Yeah.
They would have been selling to the price. So this current situation of Bitcoin, even though it is the most boring, we had outlined it back in Jan and December as the most bullish case for Bitcoin, where we consolidated 32,000. Because if it got to 42,000, that's when even I was going to turn super bearish. I was bullish at 17K, 18K November, as long as we stay underneath the 42K region for a prolonged period.
Yeah.
Right. Yeah, I share a very similar outlook as you guys right now. And I look at any dip we get within the next, leading up until early mid 2024 as an opportunity to buy on spot. And I hope we get a dip because,
What are your thoughts on 2024? That's the big question.
So
do you think the halving is going to play a big role? Do you think the ETF is going to play a big role?
I think they'll both play roles. I'm kind of a guy where I look at the technicals, and I believe the technicals precede the fundamentals. So, I mean, we saw this before FTX went down. We saw a huge bearish divergence, like super bearish. And we saw this bullish signs when the news came out about Silvergate and what was the other one? I don't even remember. When all these banks start to go under, and that actually led to a big pump in Bitcoin. And so right now, when I look at the chart, I see we're about half a year out from the halving, and we've got like a bearish divergence on the weekly. And this kind of always happens right around this time, where it gives us one last either just sideways or a big move to the downside. And then we rally around the time of the halving. And I've also noticed that for the past few cycles, the dollar will top out and then get a retracement while Bitcoin gets its relief rally in the bear market. And then the dollar like gives this one last push and puts in a double top with a bearish divergence on the weekly. And that bearish div on the dollar kind of kicks off the big move on Bitcoin leading into the bull market. So we're starting to see this happen right now. The dollar got a big move down. It's breaking out now of that like symmetrical triangle. Things look bullish. I think we're going to put in a double top, which will probably happen around spring. So, that's like the perfect storm for things to get bullish.
I think so too. I had a very similar thesis back in Jan where we outlined, hey, the dollar is going to have its death cross, right? But it's not the first death cross that we get super excited for. It's when we recross golden and then have the second death cross on the dollar, BingX, on the daily time frame. Look for that, guys. That's when you get really excited for Bitcoin's real bull run. It's on the second death cross, not the first death cross.
Yeah.
So it lines up with what you're talking about.
So Jason, I have a question for you. What do you think? This coming. I mean, okay. My thoughts are, I believe that the cycle has just about begun. Do you think that this cycle is more akin to what we saw in like 2017, 2018? Or would you say it's similar to what we saw in 2014, basically the cycle prior to? What are your thoughts as a technical analyst? Are you looking at these things? Like, what are your thoughts on it?
Yeah, so the 2014, 2015, I'm pretty sure we put in a lower low after the cycle kind of bottomed out, in my opinion. We put in a lower low before the big pump started, and then in 2000, this previous cycle, we put in a higher low. Is that the two differences you're talking about? Like where we bottomed out?
Yeah. So, and also like I guess because what we saw in 2017 was that crazy freaking volatile move, rip up to 14K, and then we saw a meltdown into COVID, right? Dump back down. So we had like this mini cycle going on between like a much larger 4-year cycle.
So what you're asking is, do we see
something similar play out this time around, or do you think what we see is more akin to 2014? Yeah, just to run up to 20K.
Yeah, so I think I could see it happening either way. I think we need to be prepared for both. Either way, 360 days before the halving, leading up to the halving, we can expect boring sideways range, but the boring sideways range in this case has a bottom of 15,000 and a top of 30,000. Right? Just like last cycle, we had basically a top of around 14K and a bottom of 3K. So we could come back down and test the bottom. That to me is still super bullish if we're going to be living the mango lifestyle over here. On the weekly, it's just a little dip, Yeah. That's how I look at it. If something crazy happens, so here's the thing. There are so many black swan events that could happen, right? Alien invasion, some kind of crazy weapons going off in Eastern Europe, cyber pandemic, blackouts, grid down kind of thing. Who knows? If we get something like that, we could see obviously a big crash back down to those lows. But if we don't, I don't see why we couldn't put in a higher low and then off to the races,
Yeah.
The markets tends to always press at the point of most pain, right?
Yeah.
And I think there are lots of market participants right now who would just not want to see 9,000 or 10,000 Bitcoin again, right? Kind of like 3,600. Do you remember the time where we drew out the pattern and we measured its target move and it came down to 3,600?
Yeah.
I was like,
Really?
there's no way it's getting there. Yeah.
That's crazy.
This is when Bitcoin got up to 14K.
It was a live stream where we measured a potential
Wow.
target down to 3,600. And Krisha was like, there's no way.
There's no way. Don't even
There's no way.
I
was like, yeah.
3K.
But it happened. And that was the point.
Yeah.
That feeling, what I'm talking about over there is that feeling, right? Where it's like, there's no way, right? There's no way, because you can't even fathom the idea, right? The market tends to go there. The market tends to go there. So we just got to mentally be prepared for where are those numbers. I think around 8,000, 9,000, cracking that 10,000 range underneath it is going to make a lot of people go,
yeah,
you know what I'm saying?
Yeah,
I'm
but
going to feel pain.
But it's such a major area of support down there. And, you know, we were all expecting lower when we were at 15.5. I was expecting lower. So we know there's major support down there. Something else that I always keep in the back of my mind is if there is some kind of a black swan event, it'll probably result in the Fed printing to get us out of whatever kind of bad situation we're in, right? So it could all work together as a major catalyst to see something similar to what we saw, you know, after the Roni dump.
It's almost as though in the current state of the macro environment, we need a black swan event to just rip the bandage off, because it's one of two scenarios, right? We get a recession, which would be caused by a black swan event, and the Fed is forced to print. So that way we can start going back down to lower rates, or we actually get a soft landing. Okay, so that's no recession. If you get a soft landing and there's no recession, the Fed is going to be able to keep rates up for this high at these levels for a very long time. And that's not a very good situation because of the huge debt problem globally, right? With such a huge debt problem, we got to understand that all of that debt is being paid by the people, right? And that's going to be for a prolonged time. That's a lot of liquidity coming from the people, and that's not going to bode well for the markets. So while a black swan event might be scary, while a recession might be scary, you got to ask yourself, would you rather everyone pay for this debt over a prolonged period of time, or would you rather a black swan event causing a recession and let's say 2% to 3% of everyone in the country losing their jobs? Which one is better? Right? Most people are going to say, you know what, let the 2% lose their jobs because I'm not going to be part of them. Right?
Because I'm going to get my pump.
The way you rip the bandage off, and eventually people get their jobs back anyways. I know it sounds really brutal to say that, but as market participants, we want the pain to be over. We want the volatility back again. We want the liquidity.
Right, for sure. Yeah, it's definitely interesting times. And, you know, we typically do a collab once a year. So next year, you know, we'll be looking back at this talking about, you know, we were spot on. So let everybody know, where can they find you guys? YouTube, Discord, all that stuff, social media.
Yeah, so it's, I mean, the channel name is Mango, Macro, and Crypto. And of course, Discord, guys, themangoway.com/Discord. Is where you can find, well, the Mango fam. So yeah, come on, join. Jason's in there already.
Yeah, Jason's in there.
Yeah, so come on, join the fam.
And yeah, it's definitely a good place.
We do share like longer time frame trades in there. We have a chart section, and we're just a really chilled out community, a family vibe community. So just come in and hang out.
Guys, well, any last words for the beautiful ladies and gentlemen out there before we head out?
Krisha?
I'll let you finish off.
Keep it Mango, keep it easy, keep it stress-free. Right now, the markets have been boring, but the big wins are coming. When they do come, make sure you catch them. Make sure to let your profits run. Take only some off the table. Let the rest ride. And yeah, make sure you take your losses quickly too when they do come. Don't be stubborn. Keep it Mango.
Awesome. All right, y'all. Thanks for watching. Peace.